Hi everyone, welcome back to the seventh episode of our YouTube series, The Basics of Short-Term Insurance. I'm Isak from Glenwood Brokers, and today we're diving into one of the most interesting and sometimes confusing principles of insurance, proximate cause, or as I like to call it, finding the real reason behind a loss. It's the principle that helps insurers decide what actually caused the damage and whether your claim is covered or not. Let's break it down.
What is proximate cause? When something goes wrong, say your property gets damaged, and there may be more than one cause involved. The insurer's job is to find the proximate cause, meaning the main, dominant, or most effective cause that set the whole chain of events in motion. In short, proximate cause, the real reason the loss happened. Once that main cause is identified, the insurers check if that cause is covered or excluded under your policy. Let's look at an example. Let's say a storm hits and rainwater leaks through a damaged roof, ruining your furniture. Now, the insurer looks at what caused the damage. Was it the storm, which is covered, or was it poor maintenance, which actually isn't? If the storm caused the damage, your claim will likely be approved. But if the roof was already old and leaking before the storm, the proximate cause might be poor upkeep, and that could mean the claim is rejected. So, identifying that main cause makes all the difference. A client phoned his broker early one morning to report that his roof has been damaged by a fallen tree. The broker reassured him that fallen tree damage is normally covered under his building insurance, and the claim was opened. When the insurer sent out an assessor to evaluate the damage, things became clearer. After inspecting the site, the assessor confirmed that the damage was not caused by wind, a storm, or any natural event. Instead, it was discovered that the client and his gardener had cut down the tree themselves, and during the process, the tree fell onto the roof, causing the damage. Let's look at how proximate cause applies. Although the claim was initially presented as storm related damage, the proximate cause was actually the homeowner's own action, cutting down the tree. Because the event was within the client's control and not sudden or accidental, it may not qualify for cover under the policy. Important notice: when doing tree felling, always use professionals with liability insurance. Proximate cause is all about fairness and accuracy. It helps the insurers make sure claims are paid when the real cause of loss is covered, and claims are declined when the true cause falls outside the policy's protection. It keeps the process transparent and consistent for everyone.
So, to sum it up, proximate cause means finding the main reason behind a loss. Insurers use it to decide whether the policy covers the loss or not. And sometimes even small details about what happened first can completely change the outcome of a claim. Understanding proximate cause helps you see why insurers ask so many questions. They're not being difficult, they're just trying to find out exactly what the real story is behind a loss. If you found this video helpful, hit like, subscribe, and share this video with somebody that doesn't really know how insurance works. Thanks for watching. We'll see you next time.